So market is going to tell you the absolute truth about your positioning, about your price, about your product and its value. In fact, that's where the principle of price elasticity comes into picture. Price elasticity is all about testing, as far as I understand. Okay, for me, it's all about testing hypotheses. And what are we testing here? Testing how much the market pays, because the market decides what your product is worth. So market is going to tell you the absolute truth about your positioning, about your price, about your product and its value. Let the market tell you what your product is worth. If it's selling well at $100, might as well test it for $150 and then test for $200 and test for $300, because what are you really optimizing for? The KPI that I optimize for is bottom line, not the top line. I don't care if the top line goes down, but the bottom line goes up. So never worry about increasing the prices of your products and testing the market. In a lot of cases, your positioning is weak simply because you are afraid of framing your product the correct way. If your product delivers the value, you can always go up in price, in a lot of cases, a lot higher than you think. They're all looking out for themselves. And if your product costs a lot of money, but then delivers more value than the amount of money you're charging, people will pay it. Not everyone will, but some people will pay it. That is where the value potential comes into picture. If there's value, people will pay. That's it. That's all you really need to know.